Ladies and gentlemen, good day and welcome to Epigral Ltd Q4 and FY25 earnings conference call, hosted by Emkay Global Financial Services Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, Mr. Vora.
Thank you. Good evening, everyone. Thank you for joining us on Epigral Ltd's Q4 and FY25 results conference call. We would like to thank the management for giving us this opportunity to host them. On this call, we are joined with Epigral's management, represented by Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Soparkar, Executive Director, Mr. Sanjay Jain, Chief Financial Officer, and Mr. Milind Kotecha, Investor Relations. I would like to invite Mr. Maulik Patel to initiate the proceedings with his opening remarks, post which we will have an interactive Q&A session. Thank you, and over to you, sir.
Thank you, Meet. I'm just filling in for that. He just had to step out for an urgent stuff for he'll be coming in. I'm just filling in. Good afternoon, everyone, and welcome to the call to discuss Epigral's Q4 FY25 performance. I believe you had an opportunity to view the earnings presentation that was released earlier this day. Overall, the chemical industry is witnessing some sort of a growth in a few selected products portfolio and a few products basket. The growth is still at a slower pace. So chemical industry movement is product specific and region specific in terms of growth. In the case of Epigral specifically, we have ended FY25 with the highest ever revenue of 2,565 crores and also the highest ever sales volume. The PAT of 357 crores is also the highest ever. We witnessed growth of 33% in revenue and 82% growth in PAT. This is majorly on account of contribution from derivatives and specialty business, for which in the recent past we have done substantial CapEx and commissioned the plants. This year we have witnessed volume growth at 11%, which led us to have a sales growth of 33% on account of contribution from higher value products. Our strategy to diversify into downstreams and our selection of high value products are yielding fruits and creating value for our stakeholders. We ended the year with a revenue contribution from derivatives and specialty business of 54% compared to 45% the previous year. We commissioned our fluorotoluenes value chain facility in March 2025, and we expect to reach optimum utilization of the plant by the end of this financial year. Once we reach optimal utilization, and also as our expansion announcement of doubling capacity of CPVC resin and epichlorohydrin facility will also reach optimum by that time. We expect the revenue contribution from derivatives and specialty business to reach around 70%. In FY25, our captive chlorine consumption was around 72%. This is in line with the above expansions. Our captive chlorine consumption will also increase and will be optimum, strengthening our integrated complex further. We are geared up completely. We have strengthened our balance sheet and our position to grow further by focusing on import substitute product, further diversifying and increasing derivatives and specialty business, and strengthening our integrated complex. We believe that our strategy will help us to have consistent growth and will create value for our stakeholders. I now hand over the call to Mr. Sanjay Jain, the CFO, who will take you through the financials. Thank you.
Thank you, sir. Thank you, sir. Let me take you through the quarterly numbers first. On year-on-year basis, the sales volume is almost at the same level. However, for derivatives, especially business sales volume grew by 12%. Revenue for Q4 FY25 increased by 20% to rupees 631 crore, against 526 crore in Q4 FY24. This is backed by the volume growth from derivative products and increase in realization. EBITDA grew by 12% to rupees 173 crore against 155 crore in Q4 FY24. This is partly on account of increase in the volume contribution and contribution from value-added products, and partly on account of improvement in realization of certain products. PAT increased by 13% to rupees 87 crores in Q4 FY25 against rupees 77 crores in Q4 FY24. The margin stood at 14%. For financials for the year as a whole, FY25, we ended the year with highest ever revenue of 2,565 crores. We witnessed growth of 33% compared to FY2024. Derivative and stationery business contributed 54% of the revenue in FY2025 compared to 45% in last year. The capacity utilization of the plant for FY2025 stood at 81% against the 78% in last year. EBITDA grew by 48% to rupees 711 crores, leading to EBITDA margin of 28% compared to 25% in FY2024. The PAT jumped by 82% to rupees 357 crores compared to rupees 196 crores as on FY2024. With overall improvement in earning of the company, thus the capital employed improved to 25% for the year ending 31st March 2025 compared to 17% as on 31st March 2024. This is including the capital work in progress. If we exclude capital work in progress, the ROC stands at 28%. Our net debt to EBITDA has remarkably improved to 7 times at the end of March 2025 against 2.0x at the end of March 2024. This is mainly on account of reduction in debt and increase in the overall profitability of the company. Lastly, the rating is also upgraded to CRISIL. Rating upgraded to CRISIL AA stable from CRISIL AA minus positive outlook. Now we can open the floor for question and answer.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Dikshant Gupta from GOG PMS. Please go ahead.
Yes, so my first question was like the realization for caustic soda and some of the products are improved, but for some products like hydrogen peroxide, the realizations have dropped. So what is the plan to maintain margins on that?
So see, that's where we have always tried to diversify our business model, getting into different set of products. So currently, quarter the hydrogen peroxide realizations were down, but at the same time, the derivatives, there were other products which had compensated for that, and that's where the average EBITDA we have landed up around 28%. And considering the situation, we believe that on a longer term basis, 25% is something which is achievable. So, I mean, that is something business model and the revenue mix will help us to have a sustainable margin growth henceforth, going forward as well.
Okay. And the capex for the next year, what are the plans for the capex? Like, where will it be deployed?
So capital expenditure, we have announced to expand CPVC resin by adding another 75,000. So we reach to 100,000 tons of capacity for CPVC resin. We are adding epichlorohydrin. We are expanding epichlorohydrin as well. So we will reach from 50,000 to 1 lakh tons of capacity by first half of FY27. So in line with that, this year we are expecting to spend the capex around 450 CR.
And for the newly commissioned plants, when can we expect the commercialization to take place?
So this year, we have commissioned the CPVC compound and the fluorochemicals plant. So all the 3 plants is ramping up wrapping up. So I guess for fluorochemicals by end of this year, maybe around December, January, will reach optimum kind of thing. And CPVC and resin and compound both are also ramping up in line with the demand that is growing.
Okay. And regarding the solar power plant, what are the expected cost savings from it when it will be completed?
So we have already commissioned, the 18.34 megawatts we have already started almost 2 years before this time. So that has already started contributing to the top line, bottom line. And in terms of cost saving, it is almost, you can say 25-30% cheaper than grid price.
Okay. And for now, my last question would be what is the highest margin product and what percentage of sales are it, and what is the market share of the highest selling product?
So, see, we have diversified products and the margin that we guide is in the range of around 25%, but we avoid giving product-wise numbers.
Okay. Thank you.
Thank you.
Thank you. We have our next question from the line of Neeraj Jumadia from Anvil Wealth. Please go ahead.
Yeah, good afternoon, sir. So I have a few questions to ask. So first is on the ECU realization. So if you can share what was the ECU realization in Q4, and also if you can share how much was chlorine negative this quarter.
The ECU for the quarter for the Q4 was around 33,000 rupees, and chlorine the chlorine was somewhere around 5,000 rupees, negative 5,000 rupees.
Okay. Also, if you can share how has been the scenario currently in terms of the ECU realization? Because I guess chlorine has further improved from April. So if you can share your thoughts here, A. And B, what was the capacity utilization of the caustic plant in 4Q of FY25?
Chlorine, in terms of chlorine, we are seeing, a lot of derivatives are expanding. Our internal consumption are also increasing. So going forward, definitely it looks better. But looking at the long term in India, we believe that now bigger capacity of caustic soda is coming. We feel now smaller capacity of chloro-alkali will not be feasible in India. Looking at the going forward, so chlorine price may improve down the line in India. But as a derivative, I think right now all chlorine derivatives, because of the agro business has revived, and it is moving on the positive side in terms of CPW is doing good in India. In terms of monochloroacetic is also doing good. So and a lot of additional chlorine derivatives are also increasing in the capacity, in the demand in terms of chloromethane or in terms of other derivatives also. So we are looking very positive, looking at the long term in terms of the chlorine application in India will increase further down the line. So we don't see the last quarter the negative margin was there will remain. Will be better off in the coming times. That's what the scenario. But it also depends on the caustic soda demand, and globally the caustic soda demand will remain robust in terms of the alumina, in terms of the nickel consumption, nickel mining, and in terms of the alumina consumption of the caustic soda globally. So that is remain firm globally, and I think the pressure will remain on the chlorine side only because of the caustic firmness, but I think we are going to be better than the last quarter going forward.
Got it, sir. So just to add a bit, you mentioned that our captive chlorine consumption is 76%. So two things here. One, how much would be the pipeline sales out of this 76%? And you also mentioned that chlorotoluenes is expected to reach around full utilization by the end of this year. So is it safe to assume that once this reaches 100% utilization, our captive chlorine consumption will go up by close to around 100 TPD?
So, once the chlorotoluene consumption, at the same time we are also expanding PPPC as well as the epichlorohydrin. So once everything will be commissioned to reach at optimum level, definitely it will take time after commissioning of the plant. But once it reach at optimum level, I think we are 90% going to be our internal and captive consumption going forward. And the pipeline customers are hardly, it is 20% maximum right now.
Okay.
And that is going to be remain constant. I don't think it will increase further from this level.
Okay. So effectively, 56% captive chlorine would go up to close to around 70% once all these three facilities reach optimum.
Yeah, 170 to 75%. Yeah.
Got it. So second question is on the peroxide. So I guess we have been operating the plant at around optimum utilization for last so many quarters. So let's assume that after consuming close to around 4,000 metric tons of hydrogen for the captive hydrogen peroxide plant, how are we utilizing the excess hydrogen? So are we converting those hydrogen to the flaker plant, or are we selling those hydrogen in the outside market? And how you see plans for other downstream products of hydrogen, or we'll keep selling hydrogen in the outside market?
So we are selling part of hydrogen. Just to give you an answer about this, it's not a dedicated answer. We are doing all mix.
Okay.
We have a pipeline customers in the hydrogen peroxide application. We are selling outside in the market also some part of it. And we are also having a pipeline hydrogen customer also. They are buying from us. And so all mix kind of, and we are also using in the flaker. So that's how we are managing our hydrogen balance. Sometimes because of the downstream people who are buying in the hydrogen pipeline, this hydrogen requirements are keep on changing and the balance are keep on changing. But we are using all multiple kind of options to consume the hydrogen, and I think this will remain as it is going forward also. Because such a big quantity of hydrogen, I don't think so it is possible to manage for one particular application, or if there is a great demand in terms of the consumer also, you are able to manage everything to sell outside hydrogen, this much quantity, because you need a huge infrastructure around hydrogen to sell continuously this much quantity what you are producing to outside, which is not possible. That's what we think.
Correct. The last question, what will be the capacity of the flaker plant?
Flaker, we have a 200 tons per day caustic soda flake out of what we produce 1000 GPD of caustic soda plant. And so, yeah.
And the utilization there would be higher than the overall caustic soda plant?
Their utilization is almost similar level.
Okay. Got it, sir. Thank you so much and wish you all the best.
Thank you.
Thank you. We have our next question from the line of Vedant Sarda from Nirmal Bang Securities. Please go ahead.
Congratulations on the great set of numbers, full year basis. So we have a plan of 450 crore of capex in the current year. So any plan? Hello?
We cannot hear you. Vedant.
Hello.
Vedant, can you
are you
use
audible?
your handset?
Are you audible?
Yeah.
So we have a 450 crore capex plan in this year.
Sorry to interrupt again, Vedant. Your voice is quite muffled.
We cannot hear you, Vedant, clearly. So, yeah.
So can you listen now?
Yes.
Hello.
Better.
Yeah.
250 crore capex plan in the current year. So the mode of financing, we have decided on that?
Financing, yes. So 450 CR, what we are saying is for financial year 2026.
Yeah.
Yeah. So, and the financing, we are going to do it by debt and debt mainly, yeah, if required, going forward. But as of now, there is no, we are going to manage from the internal accruals.
Internal accrual only, like no QIPs or debt planning for that.
Well, we regularly not, but if required, we can plan from the bank, yeah, going forward.
Okay, sir.
So debt and the internal accrual is the option, yeah.
Okay.
Thank you. We have our next question from the line of Pinaki Banerjee from AUM Capital. Please go ahead.
Hello.
Yes, sir. Please go ahead.
Sir, am I audible? Hello.
Yes, we can hear you, sir.
Okay. Sir, my first question is, actually, can you just give a general your view on how the international caustic soda prices are shaping up both at the international and domestic?
We can't hear you, Pinaki.
Sir, can you please just give a general outlook as to how the general caustic soda prices are shaping up at the international level, and what is your outlook for the future?
Sorry, your voice is very fumbling. We can't hear anything.
Okay. Sir, am I audible?
Yes. Yeah.
Hello.
Yes, bit better.
Hello.
Go ahead.
Sir, am I audible?
Yes.
Yes, Mr. Pinaki,
Okay.
please go ahead.
Okay. Sir, can you just give a general outlook on how the international caustic soda prices are shaping up at the international and both at the domestic level, and what is your current outlook for the future?
So caustic soda prices are remaining firm globally. The reason behind it, the downstream chemistry which is used chlorine globally, which is almost 60 to 65%, that is very low. So somewhere even PVC cycle is on the lowest level right now, and because of that, caustic is remain firm. That is one of the reason, and second biggest reason is that the demand from the alumina side and the nickel mining side, it is also very strong. So because of these two major reasons, we are thinking that the caustic soda will remain firm even current this financial year as well as going forward also.
Okay. Sir, and my last question is, in your presentation, the page 39, the investments, it's now showing about 77 crores. So in the last two financial years, it was nil. So can you explain what is it? Are these liquid investments or something else?
So that is a surplus cash that we have parked in debt mutual fund.
Okay. So it's liquid. So you are having almost, with the cash and investment, almost 100 crores of surplus cash in your books now.
Yes.
Okay. Fine, sir. Fine. So that's all from my end, and thanks and all the best for the future.
Thank you.
Thank you.
Thank you. We have our next question from the line of Manish Badane from B&K Securities. Please go ahead.
Congratulations, sir, for the good set of number. So my first question is, as you mentioned in your press release, that your derivative and specialty business increased to 52% versus 48% YOY. So why is there a 200 basis points hit in the EBITDA margins?
See, the EBITDA margin which was in Q4, that was on a higher side, considering we were in a cycle where the realizations, the raw material prices were already low compared to the realizations. So that was at 30% in Q4. Even at 28% is something which is, I guess, is a good number. And considering the guidance that we have given, it was around 25%. So it's not a drop off by 2%. In fact, 28% itself is more like a realistic number rather than 30%.
Okay, I got it. And sir, is there any outlook for the FY26?
So considering the capex that we have commissioned this year, we should be seeing a volume growth around 10 to 15%, and that will drive the value growth as well. And considering the products that we have commissioned is of high value compared to what we were, so the value growth should be on a higher side.
Okay, sir. Thank you so much for the answer.
Thank you.
Thank you. We have our next question from the line of Jairam Ghelani from Swan Investments. Please go ahead.
Hi, sir. Thank you for this opportunity. So, sir, what could be the revenue contribution from a chlorotoluenes project this year?
So we have just commissioned the chlorotoluenes plant in Q4FY24, and this is a product which will take, we have started the trial production. We are sending it to our customers. So approval and everything will take around 6 months to 8 months. So we believe that around end of in Q4 of FY26, we should reach optimum. So as of FY25, there is hardly anything which is coming from the chlorotoluenes.
Okay, thank you. And sir, assuming that in H1 FY27 our ECH and CPVC capacities come on stream, then is it right to assume that our chlorine captive consumption should reach around 85 to 90%?
Yeah. So in FY27, we will commission the plant, so they will run partially. and they will consume chlorine and hydrogen both. So we assume that 80-85% is something definitely achievable.
So suppose that, do we wish to further expand our capacities within the chlor-alkali space, or do we wish to enter any new chemistry?
Yeah. So in the existing campus, when we have a 165-acre land, we are having a 10 to 15%. We have kept for any derivatives, we can do it further integration, and we can reach to 100% integration of the chlorine going forward. But in the new location, which is 1 kilometer away, we have already taken a land of 100 acres. There we are looking for a new value chain and new chemistry. We are not going to enter in the similar chloro-alkali and that, yeah.
So have you identified which chemistry we are planning to enter, and would it be possible to share the details?
Not at this moment of time. So once board will approve it, definitely we will do it. But yeah, we are looking for a couple of chemistry which we are planning to do it based on the India growth story on the next 10 years.
So what could be the broad capex, if you could, just quantify in the new chemistry, rough estimate, please?
So overall, so you can divide the entire project in the couple of phases also. So that's the planning in terms of the phases, how many phases we will do it. The entire capex, it is not yet decided and board has not approved it. But once the board will approve, we will do it the phase-wise investment, how much we are going to do it in the new location.
Okay, sir. That's it from my side. Thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. And congratulations for good set of numbers. So some of my questions are already answered. Just a couple from my side. One is on the pricing side for both CPVC and ECH side. How the trends are right now, and how we are looking for at least for next couple of quarters.
Yeah. So looking at the next couple of quarters, we are looking the CPVC on the downward side in terms of the value realization, and then the ECH is on the slightly higher side compared to the past quarters because of So I think this is what we see in next couple of quarters. Yeah.
Okay. And possibly our overall capex which we are planning is, I think, will be over by first half of FY27. Would that be right assumption? And post that, are we looking to expand this chlorotoluene also if things goes as per our plan?
So chlorotoluene, we just commission it. As Milind has mentioned that in the first half, it will mostly going to be the approval of all the derivatives of the chlorotoluene which we are planning to have. Once we will reach optimum level by end of this financial year, probably we might decide to expand further on the derivative side or the chlorotoluene side, probably by that point of time. But till that time, I think we have no right now there is no plan to expand further going forward, right, as of now.
Okay. And what kind of customers as of now we are targeting for this chlorotoluene, and if at all things are went for approval, so which sort of customers are there, domestic or export also, if you can highlight?
It's a mix. Definitely export customers are there, which are majorly focused on the agrochemicals intermediate manufacturing companies and Indian specialty chemical companies who are doing toll manufacturing on behalf of all multinationals. They are going to be our customers, along with some of the pharma intermediate companies as well, because I think the agrochemical and the pharma both having application of chlorotoluene derivatives. Mostly you can say in the 70 and 30% in the ratio. In 30% is in the pharma intermediates and 70% belongs to the agro intermediates.
Okay. So overall, broadly, what we have been highlighting that almost close to 15 to 20% kind of volume CAGR growth for next 2 years is possible, is still intact, given the kind of capacity addition we have. Are we still on that?
15% volume growth is possible in next couple of years. based on the CapEx, what we are planning in terms of chlorotoluene will reach to optimized level, CPVC additional capacity, as well as epichlorohydrin additional capacity. Yeah.
And sir, just last question on the chlorine side. So as with this capacity, maybe we will be touching 85-90% kind of level. Then are we looking anything on adding capacity for caustic also going forward? If at all we need further requirement for chlorine, or would it be purchased from the outside, if at all it's required?
We are not looking for a major possibility for expansion on the chloroalkali side, but minor debottlenecking kind of things we will definitely consider at the right point of time once we reach a 90% chlorine integration.
Okay. And that I think would be done within how much kind of amount capex?
It's too early to comment, and it is just a debottlenecking kind of thing. I don't think it is going to be major one.
Okay. That's it from my side. Thank you and best of luck.
Thank you.
Thank you. We have our next question from the line of Rohan Mehta from Ficom Advisory LLP. Please go ahead.
Hi. Thank you so much for taking my question. Am I audible?
Yes.
Perfect. So, sir, back in 2022, a few years ago, management had articulated a 5-year revenue vision of about 5,000 crores by FY27, which is essentially implying revenue to double from the FY 2025 base of 2,500 crores. So I wanted to understand, is the 5,000 crore revenue still an aspiration for FY27? And if yes, how would this revenue come about? That's part one. And part two, what would make up the large contribution to growth in the next 2 years? Essentially, what would be the key drivers?
Right. So coming back, I mean, the drive growth that we are expecting in the coming years will be really coming from the volume growth from the capex that we have executed. So like this year, and FY26, the growth should come from the additional capacity of CPVC resin that we have done, chlorotoluenes, and also the caustic soda capacity utilization inching up towards 85%. So this volume growth will be for FY26, and in FY27, the capacities that we have are expanding in CPVC resin and epichlorohydrin will contribute the volume, and again that will drive the value growth. So considering that, we believe that on a CAGR basis for next 4 to 5 years, around 15 to 20% of growth is something which is achievable considering the capex plan and assuming the demand that we have anticipated might continue. So on a CAGR basis, 15 to 20% growth for next 5 years is something which is visible.
Right. And any update on the 3 to 5 year vision you would like to share with investors at this time, barring the 15 to 20% growth that you see for the next 4 years?
I didn't get you. This is for what?
So any vision statement you have for the next 5 years, sir, in terms of revenue, in terms of margin, in terms of growth, or where you wish to expand?
Yeah. So we are working on a new value chain of the chemistry, which we can expand for next 10 years. And that strategy we are working on. Once the board will approve, definitely we will share with that. But that we are doing it for our new location, which we have taken back 2 years back. We have taken a land of 100 acres, where we are planning to have a new value chain. So that we are working right now, and once board will approve, we will disclose to the investors as well.
Sure. And also, the 5,000 crores, is it something we are expecting in FY27, FY28? And the 10 to 15%, I believe, volume growth you said, and considering that the 15 to 20% CAGR, which will be essentially value growth, will that be enough to achieve the 5,000 crore revenue, or will we require an additional CapEx beyond what you have currently instituted?
So see, the 5,000 crore, the amount that we had given was based on the realizations, I guess, 2 years back when everything was at peak. So considering currently, I mean, it will be difficult to give any specific number in a specific year, though we have our internal guidelines and targets that we are looking for, but it will be difficult to give any number specific. But one thing I can give you is the volume growth that we are expecting around 10 to 15% on a CAGR basis for next 5 years.
Sure. That's it from my side. Thank you so much for taking my questions.
Thank you.
Thank you. We have our next question from the line of Dhruv Muchhal from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much. So the first question is on the power cost. So why we see an increase in the power cost, I believe, and also some increase in QOQ basis. I believe volumes are broadly flat. So what's driving this for the quarter?
Sorry, Dhruv, can you repeat?
The power cost for the quarter seems to have increased, and also on both QQ, YY. I believe volumes are broadly flat. So what could be driving this?
Yeah. So the one major point was compared to last year, the similar quarter, what we generate the solar and wind, which was this quarter, I think it was little lesser in terms of the percentage, because it is related to it's a natural phenomena. So it was little less unit generation compared to the last year. And the second thing, there is a slightly increase in the coal cost also compared to last year.
Okay. Got it. And so, second point was on the volume growth for the quarter. So you, on the presentation, you're mentioning that volumes are broadly flat YOY, but of that, the derivatives have increased. So I'm just wondering, what are the key products where the volumes have declined?
That is majorly from the CPVC and the ECH, because last year, this quarter,
on a YOY basis, yeah.
Yeah, on YOY basis. So last year, this quarter, ECH was at a lower utilization, which has reached around 85-90%. And CPVC also last year, the capacity was around 30,000 only, whereas from 1st April of FY 2020, 1st April of 2024, additional capacity of 45 also came. So that also contributed in terms of volume. So on the derivative side, when we say growth, that is majorly coming from these two products.
Yeah, but then what are the products which saw a decline YOY? So these two I understand saw meaningful growth, probably ECH and.
As you mentioned, hydrogen peroxide has slightly declined compared to last year YOY.
Achha, so the realizations were also lower and volumes were also lower. That was the key molecule which declined.
Yes.
Got it. And lastly, just a clarification, you're guiding for 10 to 15% volume growth for FY26. So this primarily comes from your CPVC and ECH ramp up. I believe chlorotoluene will come probably at the end of the quarter, but for the year broadly, these are the two key drivers for volume.
Yeah, you see, chlorotoluene it is also going to start, but it is not going to be the major contributor in this financial year. But it is also going to contribute in terms of the revenue and top line. And majorly it is coming from the CPVC additional capacity, what we have commissioned in last year. I think this will pick up in this financial year, and as well as the ECH, capacity will run on the full flight. And the caustic also we can run. So caustic also the efficiency of it will also improve in terms of the operation.
Okay, so we have made some changes to that we can optimize it better, is it?
See, that yes, every 8 years you normally do a major change in the caustic soda membrane and electrolyzer. That we have already done. That is going to be completed in May. So probably from the next quarter onwards, the operation efficiency of the caustic soda plant will also improve.
Perfect, sir. Great. This is very helpful, and thanks and all the best.
Thank you.
Thank you. We have our next question from the line of Parth Mehta from Valium Capital. Please go ahead.
Hi, team. Just a bookkeeping question. This year, the inventory has been 125 crores higher than the previous year. If you can just help me, which products do we have such high inventory?
So inventory has gone up in line with the sales as well. And yes, it is a bit on a higher side, but we prefer to give the product-wise inventory breakup. But if you consider in terms of the days of inventories, that is in line with what it was in FY24. So if you see our inventory days, that were around 45 days in FY 2024. So in FY 2025, it is 47 days. So whatever it has increased, it is in line with the increase in sales.
Okay.
Thank you. We have our next question from the line of Tanish from Boring AMC. Please go ahead.
Hi. Am I audible?
Yes, please go ahead, Tanish.
Yeah. So I wanted to understand more on the CPVC. You said that the pricing looked on the downward side in the coming quarter. So what is going to be driving this?
Sorry? On the pricing side?
I wanted to understand, about CPVC.
Because of, there is a slightly demand growth is less compared to last year in terms of the CPVC demand. And the second, because of the real estate sector is little bit lower side right now in terms of the growth. And the second is the raw material price has also gone down for the CPVC, which is a PVC. So PVC is on the lowest cycle globally right now. So because of these two reasons, we are thinking that it is going to reduce in terms of the revenue, in terms of the CPVC.
So do we see our margins being affected in this segment?
So margins again, it will be in line considering the raw material price has gone down in line with the realizations. It will be where it was.
Okay. Yeah. Thank you.
Thank you. We have our next question from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity and congrats on good set of numbers. First question is in terms of slightly longer term from a strategy perspective. Once we go to say FY27, we will be generating a meaningful amount of cash flows. So from an expansion perspective, will we be looking at only the internal cash flows or will we be going for still leveraged CapEx? Just to get a broader perspective on this. I know it's slightly longer term, but how the management is thinking about the same. Thank you.
So Rohit, for the CapEx side, normally, we always give a priority once we decide the CapEx and going forward even though, revenue and the finance you can manage from the internal accruals, but it is not go hand in hand with the CapEx what you are planning to do it, because CapEx, once you start and we would like to go on the same speed without any interference. So if required, we might go for a debt, even though internal accruals, it looks okay in terms of the yearly basis. But sometimes in the peak cycle of the CapEx, you might need to borrow from the bank. So we are having the same. Once we decide, we don't want to disturb the project because of the finance, even though if you are able to manage from the internal accruals. So that's why we always keep a priority for the project execution rather than the finance. Yeah.
The second question is again from the broader perspective. Given that there will be a couple of large PVC projects which are coming and mostly backward integrated, there will be an availability of caustic, although they will be consuming chlorine. So do we see that the ECUs will remain closer to say 30 plus minus levels, given that maybe chlorine realizations will go up, but availability of caustic will keep the caustic prices down. So to that extent, the ECU will be say 30 rupees plus minus. So what is your broader thinking on that perspective? Thank you.
Normally, if you see the caustic soda price in India, which is at par with the global prices of caustic soda. So definitely and majority the players who are coming in a much bigger capacity that focus, they are not able to manage locally. So definitely the major volume will go out in the global market, and it will be adjusted according to the global prices of the caustic soda at that point of time. And the chlorine, we believe because of these two capacities of caustic soda is coming up, we believe the chlorine may go on the positive side. So that's our point of view, looking at the long term, because even though the smaller capacity which is required for the setting up a plant of chloroalkali will not be feasible going forward, and economy of scale of caustic soda has already gone up in terms of the setting up a greenfield facility. So looking at the long term, we are looking the caustic will definitely have a excess availability globally, but at the same time the chlorine price will move forward in terms of the international level also, which was the lowest right now in India.
Sure, got it. Thanks for answering all the questions and all the best. Thank you.
Thank you.
Thank you. This would be the last question for today, and I now hand the conference over to the management for closing comments. Over to you, sir.
In conclusion, I would like to convey that we are moving in line with our strategy through our expansion plans and diversification in terms of multi-product catering various industry. We are targeting consistent growth. I'd like to thank you all for joining us here today. Please feel free to reach out to our IR team if there are still any unanswered questions. Thank you everyone for your participation.
Thank you. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.